Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com comments on why some pot stocks popped the past week. He also takes a look at U.S. Fed economic predictions. Polar Futures Group co-founder Victor Adair talks about the future of gold, the U.S. dollar, and the Canuck buck. He believes a floating Canadian dollar helps protect the country from uncertainty surrounding NAFTA. The Corbett reports. James Corbett chats with us from Japan. He comments on how China's economy is doing in the middle of the tariff war with the U.S., including the value of its currency and the stability of its real estate market. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Aben Resources CEO Jim Pettit. We'll talk to Ross Clark right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh shear zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to This Week in Money, Ross.
Good to be back, Jim.
Ross, some marijuana stocks are really popping. What's the reasoning behind that?
Well, you know, when Constellation decided that they were going to partner up with Canopy, that was a good sign. And then more recently, they've decided to put another big chunk of funds in there. And so now we've got others such as Molson Coors and Diageo looking at the industry and saying, rather than fight this, and the same thing probably with the tobacco companies, you know, rather than fight what's going on, let's join the parade. And so the rumors floating around this week are that one or more of these names is going to do the type of a venture maybe that we saw with Constellation. So you've had, on the week, I think we had a 70% move in Canopy, had a 25 or 30% move in some of the other names that are out there as well. So if you're looking for a sector that's got a fire underneath it, that's the one right now. And that also means that there's more risk than would normally be there. So the volatility, if you have a great week like this, you want to make sure that if you're looking to participate, that you've got your stops underneath and don't give back too much if things roll over. So my work, I'm not seeing any big exhaustion plays as of yet. But at the rate that these things are moving, you could be looking at that by this time next week and saying, time to take some money off the table for anybody who did manage to get their feet into the game here.
The relatively new head of the U.S. Fed says he sees no signs the U.S. economy is going to slow down. How's that affecting the markets?
Yeah, the Jackson Hole meeting and with Jerome Powell and Dahl, just talking about gradual rate rises, inflation not going to get out of hand. And so that type of dovish commentary is good for the market. I mean, here you are, S&P finally back to new highs at the end of the week, back to where we were in the January top, just before you had that hard correction. And we had pretty much everything, I guess, except the Dow, which is still a couple hundred points away from its high. All these other indices into new highs. And, it was only a week and a half ago. We had decent corrections. The S&P was down to its 20-day moving average, a little bit oversold. We got one of our springboard buy signals there a week ago Thursday, and you've had a nice pop from there. Momentum is to the upside, but not exceptional on the upside, not like we were seeing in November through January when we were having that exponential move. So what you want to watch for now is to make sure that none of the corrections become any deeper than the previous one that we've had. So that low that we put in at the 28 and a quarter level in the S&P, that should be watched pretty darn carefully. It's as markets are coming out of trading ranges, they either falter or they gain some more momentum behind them. And at this time of the year, as we move towards the end of the calendar quarter in September, the stocks that have good momentum tend to build on that momentum. The money managers want to show as you get towards the end of the quarter, when everybody looks at their holdings, that they were in the good stocks. And the ones that have got poor momentum, of which there aren't too many sectors out there right now, those ones will probably come under much more significant pressure as we move through September and into October. So I think you need to look at the sectors, see what's happening in terms of rotation, and don't fight the trends right now. So in this case, as I say, the lows we put in a week and a half ago, those are, for most of the broad indices, what you want to be watching.
Did precious metals bounce back from their horrible 2 weeks?
Yeah, we've had now 4 weeks actually of really unusual, or I shouldn't say unusual, of extreme numbers in the commitment of traders for both the silver and the gold market. And with that, all you're looking for is a catalyst for a turn. This week, we did see a good reversal. We had a low put in a week and a half ago. It retested that, had a good little move to the upside for a few days, came back with a bit of sell-off into Wednesday, Thursday, and then by Friday it had reversed back nicely. Gold was up about $18 on the day on Friday. That's a good-looking bottom, and it coincides with a U.S. dollar index that's having some trouble up at when it broke out through 95. Coming back through there is not a positive for the dollar index. So anything priced in dollars should get a bit of a bid in here. Gold and silver markets clearly would be in that category. And for the gold, you're probably looking at something in the 1260 to 1270 range as a reasonable target on the upside.
What's your outlook for the U.S. and Canadian dollars?
The U.S. dollar index, I see it as a big, broad trading range here as we move through the coming months. The index could back off to maybe 93, but I think you're into the high 90s by the time we move into the next 2 to 3 months there. Canadian dollar has reacted reasonably well off the bottom. And I think, for me, my choice here in terms of the analysis is always to see how it's moving relative to commodities. And we had a good bounce in the oil market at the tail end of the week. You've had poor lumber market, poor grain market, so that's holding the dollar down a little bit here. But if the oil market continues to be buoyant and the Canadian can't put on some new highs, that I would take as a warning. But for now, if the U.S. dollar is going to have a bit of a pullback, which it looks like it is, then, the Canadian dollar could maybe tack on a cent or two.
Ross, thank you so much for being on This Week in Money.
Always a pleasure, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Victor Adair from the Polar Futures Group, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. Welcome back to the show, Victor.
Thank you, Jim. Always good to talk to you.
Victor, what do you see ahead for gold?
I think it's going to really depend on what happens to the dollar. I think the dollar is just key right now, whether you're looking at the gold market or commodities generally, certainly the currency markets, and even the stock market, although the stock market seems to be marching to its own drummer, sort of by the stock market, I mean the American market seems to be a bit of a what me worry kind of a market. Gold did fall $200 from April to the lows of last week, and that was very much about in the same period of time. In other words, the U.S. dollar was going up, so gold was the mirror image of the dollar. It seems as though some of the other factors that impact the price of gold from time to time, such as real interest rate levels, or let's say geopolitical concerns, that sort of thing, didn't have much impact. It was really all about the dollar. And then last week, gold hit its lows from, I guess it's maybe January or so of last year. So, and it wasn't just the lows in terms of price. It was the lows in terms of sentiment. The number of ways we look at the gold market. The open interest on the futures markets was way down, and it was almost like people just thought, hey, who needs gold? Okay, that kind of negative sentiment. What we call a commitment to traders data, which is a measure of what, let's say, the hedge funds are doing in the market, showed that the large speculators had turned net short of gold for the first time, I think, since about 2002. Now, I do remember there was a chunk of time back in the late 1990s, 20 years ago, when speculators were pretty consistently short gold. But since about 2002, the speculators have always been long gold. And during that period of time, when they were most long, was right at the highs around Brexit, when we had, $12 trillion worth of sovereign debt was trading at negative yields. But since then, it seems as though the interest on the part of the public, anyway, to be involved in gold has just waned. And here's a real stunning statistic on gold. I mean, we've seen that it's down about, say, 38-40% against the U.S. dollar since it hit its all-time highs back in 2011. But if you make a ratio of the gold price relative to the S&P 500, gold is down 75% against the stock market since it hit its highs since gold hit its highs back in 2011. So it's really unloved. All kinds of ways of seeing that. And if, for instance, we had some of those other things kick in, maybe negative interest rates, maybe geopolitical crisis, maybe a weaker dollar, you could see gold higher.
Did cryptocurrencies capture all the money that might have gone into gold, with millennials much more familiar with computers than gold markets? I struggle with that because I don't know a damn thing about cryptocurrencies, but what I do know is that my son, for instance, is 31 years of age, and he wasn't even born when gold had its big time in 1979, 1980. So, yeah, maybe the people of his age group who are maybe more willing to get into the cryptocurrency market just don't even know about gold. I mean, for people our age, we remember, and there was the inflation through the 70s, and toward the end, the crescendo before Paul Volcker came in and changed the world in terms of interest rate and inflationary expectations. The gold market went up just absolutely like crazy. And, we in some ways that's imprinted in our memories, and we'll never forget it. And the younger people just don't have that memory. So, yeah, there may be something to that, Jim. There may have been the who needs gold, I'll buy cryptocurrency, created less buying in the gold market. Is China, Russia, and people in India still buying gold like crazy?
Yes, short answer. I mean, maybe I saw some stats the other day, and I don't have these at my fingertips, obviously, but Russia had just added a whack of gold. The Chinese don't tell you. They just every once in a while, and by that I mean every few years, it seems, kind of put out revised figures as to how much gold they own. But those are, it seems, at the sovereign level anyway, that's where the major offtake of gold is, and I don't see that changing.
Were they wise to snap up that gold? Because we have countries like Canada and Britain sell off all their gold.
Well, that was a long time ago. I mean, that was the defining moment in the low of gold. I'm thinking it was 1999 when the Washington Accord came out, and that was the central banks, primarily the European, but other banks as well, getting together to say, we're shooting ourselves in the foot with our gold sales, so we will limit our gold sales to 400 tons a year. And that was the low in gold just prior to that, and I think we were around $260 an ounce at that time, and since then we've been higher.
In the interviews we've done over the past few months, you've been bullish on the U.S. dollar. Last week, the U.S. Buck Index hit a 14-month high, but has fallen back a bit since then. Is this just a correction in the U.S. dollar, or is there more to it than that?
Yeah, I think it's a correction, and you're right for many months, probably going back into last year, and I was early. I was thinking the U.S. dollar would do better. The U.S. dollar had reached a 14-year high in January of 2017, and then the U.S. dollar index, I should say, had made that high, and then for the next 12 months or so, traded down about 15%. We went kind of sideways from February to April of this year, and then the U.S. dollar's jumped since then. But the interesting thing about it is it's not the index so much. I've been writing in my own blog and some of the other public speaking I do about what I call the stealth strength of the U.S. dollar. What I mean by that is, the euro has fallen against the U.S. dollar and has the British pound and the Canadian dollar and the Aussie and all of that sort of thing. But it's the second and third tier currencies. Okay, we're calling these emerging markets. And some of them have fallen spectacularly. I mean, how could you not have heard what's happened to the Turkish lira, for instance, or the Argentinian peso? And then the ones that are sort of off the radar screen for a lot of people because they're not free-floating currencies would be like what's happened in Venezuela, what's happened in Iran, that sort of thing, reminds us of, the Zimbabwe dollar years ago where he actually ended up with a 10 trillion Zimbabwe dollar note. So it hasn't been monolithic, but the dollar has been strengthening more so against some currencies than others. And I'm inclined to think that the dollar continues to strengthen. Now here's the thing. In the world of currency trading, this is an old expression, but we'd say the least ugly wins. Clearly, there are problems in America. we could talk about that for some time, but let's say the problems in other parts of the world are worse. And currencies kind of go in trends. And that's just how it is. One of the things that I think is a real powerful driver of the strength of the U.S. dollar is that they are at the vanguard of call it major economies around the world that are tightening interest rates. Right now, the spread between what you get, say, putting your money in short-term investments in the United States, like Treasury bills, is about a 3.25% premium over what you get putting your money into the same sort of thing in Germany. And that is a huge deterrent to want to buy the euro currency and go short the U.S. dollar. So interest rate spreads really do matter. And then when trends get going, even if they're just started with interest rates, trends seem to, in a psychological way, are self-reinforcing. So like if the dollar's going up, then it kind of keeps going up. Now, very, very short term, this little scare, or I should say this little issue that's come into the market where politics I've been saying that politics may be more important than central banks. By politics, I mean Trump-induced stuff like the trade wars. I think right now fears of a trade war are actually dollar bullish. But here's another facet of politics that's just come up here with the conviction of people around Trump. And you wonder, okay, is that weakening him? You know, is he more vulnerable from a legal or a political perspective? And what does that do to the U.S. dollar? Trump, on the one hand, is inclined to, you know, speak his mind and say, I want a lower dollar. Well, if he's not on the scene, maybe, you know, he doesn't say that. I don't know. There's a lot of variability right now, and also we're in, you know, the crazy August period where liquidity is thin and markets just can chop around and do all kinds of things. I'm watching closely, but I've got very little commitment in the market right now.
What about the contagion from a low-valued Turkish currency or Venezuela or Argentina spilling into other markets? Some have told me they're actually very concerned about the Mexican peso.
Yeah, I mean, we've seen contagion, and perhaps the Asian contagion of the late 90s is the one that quickly comes to mind. But I mean, just as recently as May, near the end of May, in Italy, the political scene there was such that, you know, the market began to think that maybe the Italians were taking the baby steps in the direction of leaving the euro. So you saw some dramatic swings in credit spreads, for instance, Italy over Germany at that time, and the euro took a sharp hit. That kind of dampened down. But Turkey, of course, has borrowed a lot of U.S. dollars from other places, notably Italy, Spain, and France, have lent a lot of dollars to Turkey. With the Turkish lira down so much, maybe they're going to have trouble servicing those loans, or then it gets really interesting. What if they just plain can't pay them back? Contagion risk is, I mean, we saw that maybe also dramatically during the crash in late 2008 when, you know, people were wondering whether or not they were going to get paid back money, so liquidity just went right out of the system. Yeah, contagion is, well, let's call that a real sharp swing to risk off in the markets, and that can be pretty dramatic.
We'll start talking about the Canadian dollar when we come back with more This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Victor Adair. Victor, the Canadian dollar was around 82 cents a year ago, but has been in a sharp downtrend since then. It's trading around 77 cents. What do you think is going to happen with the Canadian dollar, and is it lucky to be around 77 cents when other currencies around the world are plummeting?
Well, yes, we are lucky, I suppose. The Canadian dollar being a floating currency, and it's a pretty true float. You don't have the government or the central bank in there trying to, let's say on a day-to-day basis, trying to manipulate the level of it. Canada, here's an interesting thing. The last few months, the broad commodity indices have been weakening. I think a lot of your listeners would know that the base metals, you know, copper, zinc, lead, aluminum, that sort of thing, have been hit pretty good. I think we're down north of more than 20% in copper alone in the last couple of months. So you've seen this weakness in broad commodity indices, and over the years, you can put two charts up on the wall, you know, stand back 20 feet, one of them on Canadian dollars and one of them on the commodity indices, and you couldn't tell them apart. Canada's been very tied to commodity prices. But Here with the weakness in the commodity prices lately, Canada not so much. So the interest rate spread between Canada and the United States, just like between the United States and Germany, is very important, and that kind of favors America here and has for the past several months. And I think that's why one of the reasons why Canada has trended lower over the past year, because you get more money, you get more interest on your money in the United States than you do in Canada. I wonder though. Let me say this: for years, I've said that capital flows to the United States as opposed to from the United States when it's looking for safety first and opportunity. It just might be, and let me give you another example. In Europe, when the markets get a little nervous, you see the Swiss franc goes up relative to the euro. When everybody thinks everything's fine, Swiss franc goes down relative to the euro. So it's a bit of a flight to safety to go to the Swiss. When the rest of the world, in a general sense, feels a little shaky, for safety, they go to the United States. I'm wondering if some of the money that kind of comes to the United States has also had a spillover, let's say, into Canada. I really think that might be part of it. And here's another one, Jim, and I'm just like a aha moment. I thought, why didn't I think of that before? We've seen billions of dollars come into Canada for the legal marijuana industry. If you're an American and you want to play the marijuana stocks, you have to convert your U.S. dollars into Canadian dollars so that you can buy the shares in Canada. And that would be one of the things that's made the Canadian dollar, I think, a little stronger. It kind of puzzled me the past couple of months anyway. I think, the Canadian dollar is a little stronger than I think it would be. Why is that? Anyway, that's one of the ideas that I came up with as to why Canada, even while commodities are falling, Canadian dollar was doing better than I thought it should.
Some people have suggested it would be good for Canada to have its dollar tied to the U.S. dollar. Others are pointing out that if NAFTA doesn't work out right, the Canadian dollar being flexible is a great shock absorber for any economic problem.
Shock absorber is a great term. I've used that myself. I will tell you that if the Canadian dollar was pegged, for instance, at par with the U.S. dollar, something else has to give. So it might be, for instance, our unemployment rate would be 12, 15% instead of 4 or 5%. A floating foreign exchange rate is, I'd say it's probably the best solution. Like, let your currency go up and down rather than other things taking it on the chin.
We'll have more with Victor Adair when This Week in Money returns.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Victor Adair. Victor, even quoted as saying politics have replaced central bank policy as a key driver of change in the currency markets. Is that going to continue to be a trend?
I have said that, and I don't know if I said that out of frustration or out of realization. I mean, for years, I thought the only thing that really mattered was what the central banks were doing because it was just so huge. I mean, the central banks collectively around the world were printing literally trillions of dollars, and that had to have an effect on any financial market and even real markets like, commodities and real estate. However, Sometimes maybe you get used to things and then something else comes along, and that's the key driver. And as a trader, I always want to think, let's say any market, there's a constellation of things that have an impact on the price, but you can figure out the one or two things that are the most important, what I call the drivers, and you can kind of get in sync with that, then you have a better chance of making some money with your trading. So it seemed as though, and let's say politics, and let's substitute the word Trump, because I mean that was the truth of it, was that Trump was such a disruptor, and he was willing to stick his nose in or whatever into all kinds of things and have an impact on markets. I mean, his ability to put sanctions on other countries without even going and getting congressional approval, I think suited him to a T. You know, here's a guy who liked to be the boss and definitely not a team player. But, you know, I found that I had little or no ability to handicap, you know, what he was going to do next. But it was important. I think I said earlier in this interview that the fears of a growing trade war net were U.S. dollar bullish. Okay, and he's the one starting the trade war. And then he turns around and says, I'd like to see the U.S. dollar lower. I think the Chinese and the Europeans are manipulating their currencies, and I don't like that. So, yeah, politics is playing a role in markets for sure. And if you can handicap politics, you probably trade better than if you can't.
With NAFTA still up in the air for Canada, should the Canadian government be taking measures to anticipate it not coming in, or is it better just to let things happen naturally and not overdo it?
NAFTA's got some uncertainty. I think maybe that's the intention of the Americans. They want of Trump. He wants to renegotiate that. I think it's at a real level. People who, let's say, a board of directors is thinking they want to build a factory somewhere, and they're going to sell into the Canadian and U.S. markets. Do we want to build a factory in Canada? Do we want to build it in the United States? I think right now, all other things being equal, the answer to that question tips a little more to, well, maybe we ought to build it in the States. Or more likely, it's, well, let's wait and see how things play out. So the factory doesn't get built. So that hasn't, if it was going to be built in Canada, it's a drag then on the Canadian dollar and the Canadian economy. What can the government do about it? Well, I guess they've got their negotiating team. There's going to be some disagreements over some things. Can they come to some kind of an agreement? I don't know. You know, the Americans are talking to Mexico. It looked like they were going to do a deal with Mexico, and then they could go to Canada and say, you know, being in a stronger position and say, Canada, this is how it's going to be. I think if we came to an agreement on NAFTA that the business community in Canada thought was fine or they could live with it, I think the Canadian dollar would rise.
The benchmark S&P 500 stock index made an all-time high earlier in the week, while the stock markets in Europe and China were down for the year. What do you think is going to happen with the U.S. market?
I've been inclined, and this is a bias, and, you know, if you're a trader, you're going to have biases, and if you're aware of them, it may help you avoid some pitfalls that come with biases. So having said that, I've had a bias that the American market is probably overvalued, you know, on different historical measures. So I find it hard to be a buyer at these levels. I'd rather just sit on my hands. The flip side is, do I want to be short and go, well, you know, and I have made money shorting it this year. I probably could have made more money being on the long side, but my bias got in my way. One of the things when when capital comes to America, where's it go? And, it'll probably, somebody I've paid attention to for years, Martin Armstrong, says it goes into the large cap stocks. So the Dow Jones goes up, say, before the Russell 2000 index of small caps goes up. The money has to go somewhere. It might go into treasury bonds or something, but more likely it'll go into the American equity market. So, foreign capital coming to America, if in fact that's happening, it goes into the stock market and the stock market goes up. So, the safety and opportunity quote I said earlier, the opportunity is they buy investments in America. I mean, they buy real estate or stocks or what have you. I'm inclined to think that we could have another break like we had in late January, early February in the American stock market. I think there's a lot of fragility in the market, and that may also be a bias that I have. I'm kind of inclined that way, but right now I don't want to be a buyer of the market, but I don't want to sell it short either. If, however, the stock market was the S&P index just by a hair made new all-time highs and then backed off a bit. If we were to fall and break below some of the lows we had earlier this month, I would be on the short side. As a short-term trader, I'd be on the short side in a heartbeat.
Crude oil has fallen since its high earlier in the year. What's your outlook for crude?
Yeah, crude's been for me, it's been wicked in terms of the choppiness in the price action. There's been a lot of cross currents, and again, I bring a bias to crude. I made some pretty good money being short crude oil through 14, 15, and traded mostly from the short side through 16 and into 17. Here we did hit $75 was it a month or so, maybe it was June, and been choppy since then. It's maybe crude is one of the stronger commodities. I mentioned earlier, a lot of the base metals are down sharply. Crude's not. A lot of politics wrapped up in crude oil. I haven't been trading crude, really at all that I can remember the last couple of months, because I don't have any real I don't have any real conviction on direction one way or the other. So I don't know. I suppose I think the vulnerability is it could break to the downside. This is in a normal world of just supply and demand. But with crude oil, you're always afraid that, there could be some geopolitical event that causes the price to spike. A geopolitical event. I mean, let's not beat around the bush. I mean, somebody takes some military action in the wrong place. I mean, crude oil could jump in a hurry. So, and I'm also aware that what we call the large speculators have built a huge, long position in crude oil. So, I'm kind of from Missouri, as my grandma would say, when everybody and his dog is bullish, I'm looking for a reason to be bearish. But yeah, I'm a little, I don't have a real conviction on crude, so, I can't, that's the truth. I just don't know which way it's going.
Victor, thank you so much for being on This Week in Money.
Jim, it's always a pleasure to talk with you. Look forward to talking with you again.
My guest has been Victor Adair, co-founder of the Polar Futures Group. His website, polarfuturesgroup.com. Coming up, James Corbett, next on This Week in Money.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett, publisher of thecorbettreport.com and editorial writer for the International Forecaster. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to This Week in Money, James.
Thank you for having me back. It's always a pleasure to be here.
Low-level trade talks are taking place between China and the U.S. Are the markets there optimistic it'll work out?
If not optimistic, at least they are not freaking out at the current moment. Stocks are across the board in Asia generally up. There's a few places where there's a little bit down. So I think people are more looking for the resolution or what will come out of these types of talks, and if anything at all, rather than worrying too much about them. And so for those who don't know, yes, this week, U.S. Treasury Undersecretary for International Affairs David Malpass was meeting with Chinese Vice Commerce Minister Wang Shouwen in Washington, even as $16 billion in new sanctions, U.S. sanctions against China, were due to take effect. So there's a lot of eyes on these talks, but not a lot of anticipation that anything really substantive is going to come out of them, as you can tell by the lackluster names associated with these talks. These are not going to involve high-level officials, so it's unlikely that this is going to resolve any sort of key trade issues. And in fact, of course, we did have Trump coming out saying that there will be no progress in these talks. So that kind of gives you the sense that this is, at any rate, it's a step forward. They are at least coming to the table, but I don't think anyone has high hopes that this is going to be the resolution to whatever kind of trade war is brewing here.
Has that trade war spilled over to other Asian nations? Are they really concerned?
I think there is concern, generally speaking, but it takes different forms in different places for different reasons. One example might be Malaysia, where, as people might know, of course, they've just recently had an election and a transfer of power to a new leader. In fact, the old leader, Mahathir Mohamad. But in that transition, we see the destabilization of a number of relations, including the relations between Malaysia and China, which were quite smooth under the previous prime minister, who was happy to accept billions upon billions of dollars in loans and quote-unquote investment money from China. Well, now we have the new prime minister stepping in, and he is now canceling a couple of major infrastructure projects that were being proposed, at any rate, or were on the table through this Chinese One Belt, One Road policy. Mahathir Mohamad has basically scrapped those deals, saying that they were not good investments. And it's interesting to take a look at that, because one of them, for example, was a $13.6 billion infrastructure investment project that, according to Mahathir, could have been done by local companies for half the price. But they're being done by Chinese companies with money supplied by China, of course, on a loan basis. So he is scrapping those deals. That's, I think, an indication of the type of unease that's happening in Asia generally with China and its growing influence. Of course, there are a number of governments and a number of officials who are happy to accept money when it's being handed out, but the piper will come calling for those dues at some point or other. Another example, Sri Lanka, where there was a deep water port that was constructed by China and with Chinese loan money. When they were unable to make their loan payments because there wasn't enough business for the port, basically now a state-owned Chinese company has taken on a 99-year lease of that port in order to basically pay off the loan. So we're starting to see all of the strings that are coming attached with this, and I think that's a reflection of the growing unease about China and the way it is wielding its influence. So this, I think, plays more broadly into the trade war, because, of course, people are going to be taking a side. Different nations are going to be taking a side in this at some point, and it's not at all clear that China is going to simply be able to buy its way into the good graces of a number of its neighbors.
China, of course, claims that its economy is still going great guns. Meanwhile, economic advisor Larry Kudlow tells the White House that China's in deep trouble, especially when it comes to its real estate. Who's telling the truth?
Well, I mean, I suppose it's always a question of glass half empty, glass half full, and which side and what stats are you looking at. But I think there's no doubt that what is being done now with these tariffs is going to have a sharp and important effect on the Chinese economy, certainly in the near term. We'll see what eventuates in the long term, but I think there's going to be some belt tightening broadly, not just on the Chinese government side, but on the Chinese public side as well. This will be filtering down to that level. So, as always, I think official statistics about economic growth and And things of that nature have to be taken with a grain of salt, especially in China, where we know that the books are heavily cooked. But there are a number of ways that one can detect the actual growth, expansion, or contraction of an economy. One of which is consumer spending and consumer habits. And there was an interesting piece up in the New York Times this week about basically China's consumption downgrade, talking about how not only is the economy slowing, but basically personal consumption is also slowing, and people are tightening their belts a little. And I think that's one way we can get a handle on what's really happening. Whether or not this is really the wheels coming off of the freight train that has been the Chinese economy over the last several years, I think that's yet to be seen. But there is a slowdown that is happening right now, and I think that's undeniable.
Wasn't China trying to get their economy to the point where they could be more self-reliant on consumers like the U.S. is?
Of course, that is the long-term goal. It is always a question of how they're going to get there without removing the types of very rigid controls they have over their economy and over their currency and capital controls and the other restrictions that would have to be, if not lifted, at least eased in order to eventuate that kind of standing of China as a player in the global economy who can interact freely with other economies and who can ultimately develop the internal economy that would be needed to move from an export-based economy to domestic demand economy. It's still a long way from here to there, and it's not at all clear how the Chinese government is going to balance all of that and spin all of those plates. So that's, I think, the long-term goal, but we're a far away from that. I mean, I think China is still primarily what is happening is still the leftovers of that vast industrial boom that we've seen over the last couple of decades, and still heavily export dependent. And I don't think that's going to change anytime soon.
Is one of the reasons why copper has fallen in price so much because China has cut back their use of copper, and they use about half the world's copper.
Yes. Well, I mean, it's exactly right. Supply and demand very much hinges on who is buying and at what price. And with China cutting back on copper demand, then obviously there's going to be a reflection of that in the price. Although apparently the latest reports that I'm seeing is that copper is rebounding a little, and I'm not sure how that plays into the overall picture of China and its spending habits. But we do know that, as you say, China accounts for about half of all copper demand in the world at this point. So what is happening in the Chinese economy very much has a very large effect on a lot of commodity markets like copper.
Electric vehicles use a lot of copper. Is China able to spool up rapidly with the building of electric vehicles, and are they teaming up with Tesla?
Yes. Well, yes, there are, Tesla's, has some plants in China, if I believe. And there has been talk about manufacturing in China. But of course China is also trying to develop its own electric vehicles. And I believe the latest I saw was, a company called NIO, N-I-O, which is a Chinese electric car company that's, seeking to raise, over $1 billion, in fact, $1.8 billion in an IPO. So definitely China is trying to kickstart its electric vehicle market in line with its vision to become a world leader in technology generally, but actually artificial intelligence specifically by 2030. And I think electric vehicles are going to be a key part of that. We'll have to see whether or not they're able to sustain the infrastructure to do that. And again, that's another part of the shift away from the export economy to more of a internal domestic demand economy, because of course I think it's going to be primarily these Chinese electric car companies are primarily at first at any rate going to be providing internally to the domestic markets. There is a chance that they may really ramp up to more of an export market as the technology develops, but again, that's all quite speculative at this point.
We'll have more with James Corbett next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett in Japan. James, the Saudis have decided to withdraw their IPO for Aramco. They offered it to be exchanged on the New York Stock Exchange. They wanted full disclosure. The Saudis said no. They moved it to London, and in London said they didn't want it. Is this an indication that people are wary about doing business with the Saudis?
That might be one of the things that are going on here, but I think there's a lot of different things at play. And of course, even the idea of offering a stake in Aramco was a pretty revolutionary idea in the first place, and I think was quite surprising to a lot of people. So perhaps this is cold feet or second thoughts. At any rate, as people might know, they were trying to attract a $2 trillion valuation for the company, and they were going to sell off a 5% stake of that, which, again, is a pretty significant thing, given that Saudi Aramco, of course, is essentially the heart and lifeblood of the Saudi economy. So to sell off a stake in that is a pretty momentous and important thing. The fact that it's falling apart, I think, speaks a lot to the overall uncertainty that's happening in oil markets right now, where we see trends that develop and are dashed by daily news, and we see so much going on right now in terms of supply uncertainties, and Saudi Arabia, of course, as always, being the center of global efforts to keep supply limited enough that they are able to profit from their holdings. It has gotten to the point where Saudi Arabia may be seeing more of a strategic value in keeping its 100% Saudi Aramco stake rather than selling off a piece of it. The other aspect of that, of course, is, well, if they're selling, who's buying? And there's, I think, a lot of reasons for people to be concerned about the issue of getting into bed with the Saudis economically or politically.
Was there any reaction in Asia to the Saudis cutting off diplomatic relations with Canada after Canada criticized them for their harsh treatment of human rights activists?
I think a lot of countries are trying to stay out of this to a large extent. I haven't seen any official response from the Japanese government. They may have made one, but I haven't seen any official response. But I don't think there are many countries in Asia that are going to insert themselves into that too deeply, especially, of course, in oil-dependent regions and oil-importing regions. Maybe want to just keep their ammo dry when it comes to their relations with Saudi Arabia. So I think probably we're not going to see a lot of diplomatic protests in favor of Canada's side in this coming from Asia at this point.
Any more talk of an oil buying club where nations like China, Japan, Malaysia, India would group together to do mass purchases of oil to try to keep the price down?
I haven't seen any update to that story, and as people may or may not know, as you say, at an energy summit earlier this year, India floated the idea of forming an oil buyers club, kind of an anti-OPEC or a counter product to OPEC, where, of course, OPEC is the Organization of Petroleum Exporting Countries that band together to essentially set production limits in order to try to maintain prices, an oil cartel, essentially. One of the things that they do is put a premium on oil that is being exported to Asia, Asian countries, for no justifiable reason that they can state clearly anyway, just because Asian countries will pay that premium. So India was hoping to get some of its Asian partners on board with the idea of an oil buyers club where they would band together as a type of buyers cartel and try to negotiate a better deal with OPEC. And this isn't the first time that India proposed it. They proposed that same idea back in 2005. It didn't have much traction then. There are indications that there are certainly some buyers here in Asia that would benefit from that, but I haven't seen any further details about anyone biting that hook. I'm not sure if this is going to eventuate, and if it does, it's still a question of, how formal an arrangement would that be, or would it just be a sort of informal banding together for negotiations? And as I say, I don't think there has been any follow-up to that story at this point.
Any reaction on Asia to the Canadian government taking over the Kinder Morgan pipeline, twinning from Edmonton to the Vancouver area?
I haven't seen the reaction, but again, we'll have to see how this ultimately affects the everything from including the actual shares of Kinder Morgan. I think that's going to be the interesting thing to be taking a look at. And apparently, we've seen some movement with short sellers in recent times. How this affects Asian investment and the idea of Asian supplies, I think still remains to be seen.
Well, they'd certainly be less reliant on the Arabs, wouldn't they?
It would be, and I think that's something that obviously Asian markets are interested in diversifying their sources, but it may be a question of beggars can't be choosers. And I think another interesting aspect of that is going to be the Iranian relations. And for example, Japan, up to this point, having relied on Iran for 5% of its oil consumption, oil imports. Well, in the wake of U.S. sanctions, how are they going to fill that gap and fill that void? Well, certainly it would be beneficial if they could get a Canadian source for that.
You mentioned in a past interview that China actually has a surplus of solar power right now. How is Japan in the solar power field?
That's a good question. I know that Japan had, for a number of years, heavy subsidies for solar panel placement. Basically, the idea was that you would get a certain subsidy if you put solar panels on your house, and you could sell it back into the grid. And that aspect of it still exists. How widespread it is, I don't know the statistics, but I can tell you personally, from my personal experience here, there are an awful lot of houses here that do have solar panels. So it is widespread. But of course, Japan is not really known for its solar panel manufacturing. In fact, 7 of the 11, I want to say, largest solar panel manufacturers in the world are Chinese-based. And one of the others is, I can't remember the title. It's something like Canada Solar or something like that. But it's headquartered in Canada, but it does its manufacturing in China. So China is where a lot of this technology is coming from. And it's certainly widespread adopted here in Japan, but I think doesn't have an effect on the economy in terms of manufacturing.
We'll have more with James Corbett next on This Week in Money.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett. James, when it comes to the Chinese currency, are they actively trying to drive it down, or is that just a natural happening with the tariff wars happening?
Well, I would say there's a little bit of both going on, but I think that their interest, of course, is in seeing the currency devalued at this point, because that is their main weapon in this trade war. They can't really affect the U.S. with sanctions in the way that the U.S. can affect them with sanctions, or tariffs, I should say. But they certainly can weaken the currency, because they are directly in control of that. So one can speculate to what extent they are forced to devalue, but I'm sure they're not crying tears in their beer over it. They definitely do want a weaker currency. Trump also, of course, wants a weaker currency, which is one of the factors, I'm sure, into why we've seen criticism coming from Trump of Fed Chairman Jerome Powell over the last few weeks, really, and most notably this week, where he's been criticizing the Fed's stated intention of continuing its interest rate hikes. I think Trump wants to see the weaker dollar so that he can more effectively wage this trade war, but the Fed isn't exactly cooperating. So I think China, if they have any upper hand whatsoever in this situation, or if they have any hand at all, I think it would be in their ability to devalue.
On the Corbett report, you raised concerns about the next wave of censorship on the internet. What is that wave, and who's going to do the censoring, and who should be concerned?
Well, this is a kind of a two-pronged or double-layer story, because the first layer is, I'm sure many of your listeners have seen some of the moves against Alex Jones in particular of Infowars.com, who was taken off of a number of platforms, Facebook and Spotify and Apple and what have you, all within 24 hours of each other, effectively deplatformed from a number of different outlets. And there was quite a hue and cry over that, even from people who very much disagree with Alex Jones and his reporting, saying that, well, it's not fair to effectively censor this person. And one of the things that I'm seeing as a potential response to this from some people who realize, well, this might just be the thin edge of the wedge, and yes, one day they come for Alex Jones, the next day it may be whatever website you prefer to visit, maybe next. And so one of the things that people are saying is, well, what we really need is we need the government to step in and make sure that these big platforms, Twitter and Facebook, and these platforms that are essentially monopolies on social conversation in our day and age, are neutral and fair arbiters, and they don't kick people off for exercising free speech. Of course, I see that as just as a different form of censorship. In this case, it would be the government ultimately deciding who can and cannot be placed on these platforms and for what reason. And that plays into the even bigger question of, well, I think the large platforms, Twitter and Facebook and Instagram and YouTube, actually desire government regulation because it helps to cement their place as monopolies in the structure. In the same way that if the government had intervened 10 years ago, it would have been intervening to try to regulate who can and cannot post on MySpace. But no one posts on MySpace anymore because people moved to other platforms. I think Facebook and Twitter and YouTube and these big platforms are acutely aware of that, and the fact that they are losing users. In fact, in the past year, something like 40% of, I believe it was 40% of social media users have reported deleting at least one social media account. People are already starting to get tired of platforms like Facebook and Twitter, which they see as controlled and manipulative and selling their data and other things. If the government comes in to regulate these businesses, however, and effectively regulate any competition out of the market, then it may actually cement these companies' place in that market. So I think that they actually are looking for this type of regulation, and I think that's kind of the second layer of this censorship wave that we might come to see in the near future.
Well, if there's government regulation on content, can government taxes on that content be far behind?
Excellent question, and the answer, I think it's a rhetorical question, but the answer, of course, is no. If there's a way to regulate something, then there's a way to tax it, and you can better believe that the government will find that way.
James, how concerned are you, being an independent information producer, about governments dipping their fingers into what's going on the internet?
Fundamentally, I'm more concerned about the government potentially coming in to regulate these things than I am about the companies themselves, because I personally, on my website, I do post to YouTube, my videos to YouTube, because that is where the vast majority of people watch their videos these days, but I am also simultaneously posting to other alternative outlets, BitChute.com and DTube and other alternative platforms that are coming up that are decentralized and or blockchain-based, so they're effectively uncensorable. These are where people really should be going instead of these controlled, centralized platforms. So I'm trying to inculcate that in my own audience and raise awareness of these platforms, which is great. I think that's the market at work, and that's the way it should work. Ultimately, people should choose where they want to spend their time, and give their data and all of that in our increasingly online economy. But if the government comes in, as I say, if the government comes in and says, well, then you must regulate this and you must have these procedures in place, and effectively regulates any alternative platforms out of the market, then I am at the whim of YouTube or Twitter or these platforms, because they will essentially be all that's left. And that, to me, is, I think, the greater threat to outlets like myself. I'm not on Twitter. I'm not on Facebook. But if I was and I was kicked off, I can't imagine myself just simply begging, oh, please let me back into your club. I think the point is to try to find or create alternatives, and that is possible at this point. It would not be possible in the event of a government regulatory crackdown.
The Corbett Report has started its annual Real Fake News Awards. What was the first winner of the Real Fake News?
There were a number. So this was something that I did back in, I want to say January of this year, in response, of course, to Donald Trump, who had his fake news awards, or the Trump administration had their fake news awards earlier this year. Well, in response, I had the first annual Real Fake News Awards, where I gave some awards to a number of propaganda pieces from 2017 that I thought were particularly egregious. One of which was a National Geographic story about this heart-wrenching video shows starving polar bear on Iceland's land. And there is a heart-wrenching video. I think anyone would be quite concerned to see clearly a starving polar bear looking for food and essentially about to die. It is quite a heart-wrenching video, but immediately National Geographic decided to caption that, talking about how this is what climate change looks like, which was upsetting to a number of people and outlets. A lot of mainstream outlets, CBC and others, did have posts at the time saying this is irresponsible. They shouldn't be linking this particular individual starving polar bear to climate change. Polar bears do starve, even in a non-warming climate. It's not necessarily related to that. We have no understanding or proof of the history of this bear and what might be the problem. It's irresponsible to go around claiming a climate change link. And in fact, the hue and cry was so severe, and even the photographers and videographers of the actual original footage themselves were so upset about the way that the agenda was being pushed, that this was a climate change related story, that just in the last week, National Geographic has finally, if not retracted, at least had to correct the record on their headline and admitted they went too far in trying to connect this to climate change. So that was one of the examples of the fake news awards that I gave out earlier this year.
James, thank you so much for chatting with us.
I very much appreciate it. Thank you for having me on.
We've been talking with James Corbett, publisher of thecorbettreport.com. He was speaking to us from Japan, where he has worked and lived since 2004. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, James Corbett, and thank you for listening. If you have any questions for the show, you can send them to info@howstreet.com. Now stand by for Company Showcase updates right after the show from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Larry, you're at the San Francisco Money Show. What's going on there?
Well, it's quite busy, Jim, and we're very happy with our location. We're right there where a lot of the speakers are speaking, including myself, called the Bullpen. And it's so noisy down there, I was going to take the call from the floor, but I didn't think I'd be able to hear the questions that you would even be able to hear me over the noise in the background. So I came away to a quiet place, and I'm prepared to tell you that we've had a very active booth. We've had a lot of interest in what we're doing, and which is the reason that we're down here. and a lot of investors have came by, and Zarko and myself are managing the booth, and we're getting a lot of interesting questions. So there's a lot of interest in what we're doing, and I'll give you an example of what's been happening lately. There was lately a story out on LG Chem, who are increasing their production to 90 kilowatt hours, and that per year, I should say. And we did a little figuring on the amount of cathode material that was in that material, and it was 2.85 billion. That's just one battery manufacturer. It's going to use up cathode materials, and on a formula of 532 for NMC, and those are huge numbers. That's what we look at. That's what gets us up in the morning, is the fact that there's so much money being spent on these lithium-ion batteries, especially for EVs, that we can certainly garner a part of that. There's batteries coming free now, and we expect that there will be a lot more in the future. But getting back to the show, it's well attended. They've had some very good speakers here. We listened to them yesterday, and we feel that it was well worth the money and the time to come down here to spread the good word about our company. And we're getting, like I say, we were getting a lot of in-depth questions, and I think it'll be beneficial for us, this entire show. So as I wander around, there's a lot of different technologies on display there. There's a lot of mining companies, and it's a real mix of everything, including a three-wheel electric vehicle on display there. So it's we feel that we're in the right place at the right time. And we've had some kind of seesaws in the market lately, but we're picking up steam again today. We'll see what happens at the end of the day, like it did yesterday. So there's not much we can do about that, but to put it in language that anybody can understand, is investors are ready for us. So we're going to have to get out and talk to more investors. All our shows before have been, pretty much restricted to battery shows, EV car shows, those types that we were invited to and to present at, but they weren't investors. We made some good contacts with some of the big battery companies and everything, but in order to keep the doors open, we have to have investors in the market, and so that's the real reason why we're here.
Larry, are you getting interest from any one particular sector or country?
Well, I have to say the major interest that we're getting is from Asian investors, and but a lot of them are local, and I think most of we've had a mix of them, but I'd say predominantly Asian. And as investors stand, I don't know how big or small they are, but we treat them all the same with the same respect. And we'll see what comes out of this show, but ethnically, that's the only ethnic thing that I can think of, is that the Asians are much more interested in what we're doing. And so that's a big change. I mean, a big change from most of the investment shows I've been at. So I hope that answers your question, Jim.
Larry, for new listeners, can you explain what American Manganese is all about?
American Manganese is a critical metal company that has a few patents, a patent for actually treating very low-grade ores and getting out electrolytic manganese metal and electrolytic manganese dioxide, which is used in lithium-ion batteries, for those two metals at costs that are very similar to what the Chinese costs are. And so that makes us competitive when the price is right. And we've got a project there. But in the meantime, we found that, or Cameco I should say, found that the chemistries, the cathode materials should, and I'm talking about the cathode materials we've been talking about all along, like nickel, manganese, cobalt, and nickel or cobalt, aluminum, lithium. Those types of chemistries that we should be able to get out with our technical ability on our recycling of manganese. So we've shown that we can do that. So, and we're probably, and I'd have to say, from our own investigations and everything else, the most advanced advanced EV car battery manufacturing recycling program out there when it comes to cathode materials. So that is patent pending. We've had the patent published already, so we're pretty confident that that patent will be issued very soon. We have existing patents on the manganese in 4 different countries, and we'll go for a lot of more countries once we get the U.S. patent here.
Larry, where are you traded, and how can people find more information about American Manganese?
We're traded on the Toronto Stock Exchange Venture under the symbol AMY. We're traded in the U.S. under symbol AMYZF. And we're traded in Frankfurt under the symbol 2AM. And we have a website out there called AmericanManganeseInc.com, where everything that we're doing is on that website. A lot of research can be done. And you can contact us contact me specifically at LREAUGH@AMYMN.com, or give us a call at 778-574-4444.
Larry, thanks a lot for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. He was speaking to us from the San Francisco Money Show. I'm Jim Goddard. Our conversation took place on August 24th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thank you very much.
Your drilling programs are going well, are they?
Well, yes. Based on the news we put out last week and the response we got, yeah, I'd say very well. That first hole that we've come out with, actually the only hole we had complete, we had actually rushed it, so it's quite a ways away the rest of the holes. But it was hole number 1 of this year. It's hole number 10 in the sequence of things. Very good results. Basically 38.7 grams over 10 meters, and included in that was 62.4 grams over 6 meters. But there was 3 more intersections in that hole, not connected. There's 4 intersections, and it's probably at the total depth of 125 meters, so like from surface straight down. Another intersection was 22 grams over 4 meters, 3.9 grams over 13 meters, 8.2 grams over 6 meters, and these were not connected, so they're all individually accounted for. Pretty impressive. Might say that it's one of the best holes reported in Western Canada in a long time. So that's got the market going. We've announced the financing since then. Eric Sprott will be the lead order in it. He's a new big shareholder of the company, probably the largest now. That will close shortly. And, we're in great shape. We're going to increase what we're doing. We're going to concentrate on the Boundary North Zone that we discovered last year. That's where this hole is. It was lined up just behind the pad from last year that had the 3 holes that found the boundary north zone. And so about 50 meters behind it, coming in at the 2 holes were at 45 and 60 degrees. So they came in below last year's at a just like clockwork. It's just amazing. But it probably got a lot to do with the angle it's on. It's about a 40-meter separation in terms of being below those holes from last year, at least the top 2 holes from last year. And it's greatly expanding our knowledge on this north boundary zone, but there's a lot more that we need to understand. It's hard to get the true orientation, the true width. We're trying to get a handle on the structure, and to do that, we have to drill a lot more holes, create these pierce points so that we can create a 3D model and understand the orientation. We're also bringing in oriented core to help with the process as well. But in the meantime, we drilled 7 more holes after that one in the immediate area. We're waiting for assays for those. And then we moved the rig south and across the valley to the west side. First holes ever drilled, we put 3 holes there, and now we're back to the north boundary zone again. And still waiting on assays. And, we'll have a significant amount of holes in this north boundary, or boundary north zone, that will really give us a better understanding of how to look at it and how to drill it. Because we think it extends much farther to the south. I don't think it's a coincidence that 230 meters to the south was Noranda's historic hole from way back, which was comparable grades to it. These 2 are basically 230 meters apart. And what's in between, there's lots to do. This is a massive geochemical anomaly. Parts of it coincide with geophysics done a long time ago, like across the valley where we drilled those 3 holes subsequent to this discovery hole. There's a very large geochem anomaly and a mag survey coincidental to it that shows something there. That's why we drilled there. So we're just waiting on that information to come back too.
Jim, can you give us some historic background to all of this?
Well, this was the number 1 priority area for us to look at when we consolidated all the data and did a big compilation study. And then you take all that information and you prioritize areas to go into, targets. And this was the primary one that we came up with. When we got to boots on the ground, we realized there's not a lot of outcrop. There was 1 outcrop, but that 1 outcrop, this is why we ended up at the boundary north zone drilling, had a 50-gram sample on it. So that was a good indication. Everywhere else along this area of our known boundary zone was undercover. Vegetation and sort of talus, coming down from the mountainside. So you got to get through that and into what we're hitting now. As you head south, you start running out of the ground cover, and you see more of the geochem analysis sort of starts to really make sense. And now we're fine tuning the geochem analysis. We're redoing it, looking at it a little differently, and lo and behold, it looks like you can actually sort of see the structural corridor based on that, and some of the geophysics as well. So I think we've got a very large area to look at, far larger than we first anticipated.
Jim, where is Aben traded?
Aben is traded on the Toronto Stock, the Venture Exchange, under ABN, the OTC QB, which is ABN.V, and in Frankfurt, E2L2.
How can people get more information about Aben?
Well, I would definitely go to the website. We're just redoing the PowerPoint, a little bit more informative. So I would go to ABenResources.com, and you can call the office and get in touch with Don Myers.
Jim, thanks a lot for the update.
You bet.
I've been speaking with Jim Pettit, CEO and President of Aben Resources. Our conversation took place August 20th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.